struggling with Propfirms? Let's go. I'm going to be showing you guys 4 powerful techniques, right? Because we always focus on how to make more money, right? We always focus on this. This is why you're losing money. You gotta do the opposite. If you focus on how to lose less, and I'm going to be showing you 4 powerful techniques, and you can apply different ones while you're managing the trade live. And when you do this, you're significantly going to start losing less. And the money that you're saving, you can use that money now to trade on your next trade, right? So normally, and guys, an edge is not this basically, right? There's a huge confusion. An edge is not if your risk to reward is like oh, I'm going to risk 1% here, go for the 1 to 4 as you can see over here, and then that's just going to give you, oh yeah, I've got an edge because I've got huge risk to reward gains. No, right? That is just the way I look at it now. I'm really doubling down on edge, and I like to really dissect what really makes what really gives your strategy a true edge, right? If you look at this here, some trades are here 1 to 4, some trades here 1 to 16s. Obviously marked 2 losses over here. You're never gonna have a 100% win rate. And let's just say, even for in this instance, let's just say with 10% in drawdown, right? Here 1 to 7, here 1 to 7, right? Now what I can show you guys clearly here, and I've even put this in my one-to-one mentorship, unlimited one-to-one mentorship. If anyone is interested, link will be in the video description. By the way, huge milestone. We've crossed 25, well, approaching 2600 YouTube subscribers, which have crossed actually. And this was only a few days ago. 1,000 members celebrating, and now we're on 1,100 members. Absolutely insane. But if you are interested and you're still struggling with your trading journey, link will be in the video description. You can just message me one-to-one here, where I show multiple challenges within a few days. And in my previous video, I even show trading a live funded account, but starting small, and that's the whole idea. Don't purchase these 100k 200k accounts and blowing money, especially if you don't even know what you're doing. So you can message me one-to-one, and it's so many resources involved, so it should definitely send you the right direction. But even if you apply what I'm about to show you, how to manage your trades live, to apply these methods, where it's just gonna improve the art of losing less, your skills to lose less, right? And so without wasting time, let's start with the first one, right? So what I like to do, guys, once got the zones marked out, and let's just focus on, let's look at the most recent one. I'm going to be using gold for the example. Look at this one, guys, right? So we get the breakout, price comes up, got a strong bearish long wick rejection here, and then we just take a sell from here, right? Completes the evening star pattern. So let's just say we focus on the center of the zone. That's where, once we draw on the zone, we want to focus taking the best opportunity. We focus on the center of the zone. So now, now some people like to have their stop losses above the wick. I normally like to have a fixed TP, right? Now we're going to be going over this. Why? I can go over many things, the reasons for having a fixed TP. For example, GJ, I've got, you can see here on the 4-hour time frame I'm here, and one blue line to blue line is 1 week, one red line is to one red line is 1 month. You can see how much data I've collected, right? I mean, it's insane. I've got about 2 years of data, pretty much, so it's crazy. But that now data tells me why this is so important. On average, how much I should have my stop loss, how much from my entry point, how much pips I can get away with. So that gives me it's like, I don't want to do something like this. Put this down here. Yes, I would have got a bigger risk to reward, but then am I able to, if I go on to another trade, let's just say, I'm going to use this for example's sake, and then put it above here. Yes, this one goes into a little bit of profit as well. But what I've seen, and trust me when I say this, guys, having a fixed stop loss, from my personal trading experience, gives me better results, right? So I want to give a trade on average enough breathing space, what I'm just trying to say. And I've seen, for example, in this instance, 300 pips for gold, for this example, 300 pips is going to do just fine. So anyways, sticking to the coming back to the point. Now what we see here, guys, okay, method one, right? When we do 300 pips, this is what you can do. Soon as you enter the trade, right? So this one is giving, let's just say, a 1 to almost 1 to 6, right? If let's just say if you can see the future, let's just say it gives a nice 1 to 6 almost. What you can do is risk 1% and move your stop loss to half instantly, so around 150. Now, yes, you will lose a little bit more because now I've just, but now what does that instantly do though? I was risking 1%, right? I was risking 1%, and now that trade has automatically, I was still obviously, when I'm risking 1%, my ultimate, my real gains will still be, around 1 to 6. If you're trading on a 100k account, let's just say that's 6,000. But now because I moved it to half, that's a, I've doubled it. Now that's going to be almost a 1 to 11, 1 to 12 risk to reward. And that's super powerful, guys, because I'm focusing on how to lose less. And if your backtesting data shows, why would I come to this conclusion, right? Look at this. This trade over here hardly ever goes into drawdown, right? So I would get away with moving it to half. This instance here, let's just say 150, okay, I would lose this trade. But this is where discipline comes in, and you should be able to, okay, moving on to the next day on your next trade. Over here, like, look at this one here. Will we survive? 150. This is why data collecting is super important. Okay, perfect. I will still win the trade. And now it's a 1 to 9 risk to reward. Even though I'm risking, because I was risking 1%. Obviously, I understand it still be, you will only gain like your 4.6k, right? But because I'm only losing half, but even though I'm traveling less, I'm gaining, my risk to reward is increased to a 1 to 9. I hope that makes sense, because you're risking 1,000, but whenever you lose, you're only losing 500, right? Again, here, look, this winner here. Like, this is why, now, obviously, depending on the data that you collect, work where you're, if you're using this stop loss method, how much you can get away with consistently, right? Obviously, you will lose some, you will lose more, but this is super helpful with Propfirms, guys. Why? Because when you're trading with Propfirms, they only give you 10% drawdown, right? That's overall your 10% drawdown, whether you like it or not, whether you admit it or not, it's only 10%. Now, some Propfirms is 8%, some Propfirms, it's 12%, but the industry average is 10%. So now when I apply this method, I have 20 lifelines. I have 20% drawdown now. So, but still, I'm applying 1% per trade. So I can still, get a nice amount of profit gains. Now, see, so apply this, guys. Backtest this, very, very powerful. Now, another method, guys, we're going to move on to method number 2. Method number 2, guys, is basically, let's just say here. Now, imagine the trade goes into drawdown, right? So what you can do now, we're going to look at these as levels, right? This is level 2. And this is level 3. Just call it 4. We're going to divide this into 4, and every time, basically what you want to do is every time price comes up, and this is more helpful if you use magic keys, like a tool like magic keys, which gives you the option to, basically, if I just show you, let me bring up magic keys. If I just show you over here, what you can do, guys, is close half the position, close the full position, or close custom. Now, what you can do by closing custom is, for example, you can even do it by settings when you go on the broker. It's basically, you can remove 25% of the trade. So removing 25% over here. If it goes higher, remove another 25% of drawdown, remove another 25% of drawdown, and by the time price hits your stop loss, if you do the maths, and if my maths is correct as well, you only lose half the position. Now, why is this still, different? But someone might say, well, it's similar to this method over here. Well, no, not really. Because by the time price comes up to here, there is still a chance it could reverse and continue pushing down. Now, still, you've lost a little bit less, yes, I understand, but you give the market still that extra chance that it could do a U-turn and still run into profit. Whereas in here, if you just close the halfway line, if price reached the halfway line, your full trade is closed, right? Here, you are still allowing the market to have a bit of more breathing room to head into profit, and still allowing the market to have that chance, right? I hope that makes sense. Now, even if price came up to here, halfway point, you obviously you'd lose half the trade, right? You would still lose. I think at this point we would be down about half the percent. And then obviously if the market came down here, you'd recover that 0.5%. I can't remember exactly. But obviously you should be closing where by the time you get to the end, guys, you know you lost half the position. But obviously that is still a one method of losing less. I've used it sometimes where I lose 0.75% of the trade, you know, and or sometimes even 0.5%. But it's a powerful method. Again, coming back to the point of losing less, you can refine this method, apply it, and use it to your own needs. You can close 30% of the trade. It doesn't have to be 0.25%, or close, you know, whatever you 0.35% every time price moves higher. So this whole video is on the basis, guys, losing less, and not just focusing on high risk rewards, but what do we do when price, we are risk managers, what do we do when price goes into drawdown, right? Okay, so you know, method number 3. So basically, guys, now this is obviously your, you know, obviously this is going to be quite familiar. This is something that even I show in my one-to-one mentorship as well. My students will be aware of this. Whenever price runs at 1 to 2, and I think this is basically everyone normally is aware of this, but not many apply this. So you're opening, you're allowing your full risk of 1% trade, or whatever, how much ever you're risking, right? Yeah, you're allowing it your at full risk. But as soon as the trade goes to 1 to 2, you put the trade at break even. Now backtest this, super important. Or even if backtesting result shows, soon as you're at 1 to 1 even, put it at break even. Why? If backtesting results show, like perfect example is over here, guys, right? Perfect example over is here. If backtesting results show, whenever you get your entry, but price never comes into, you know, to test that zone again, why would you still have this open, right? Put it at 1 to 2 and put it at break even. Why does this help? Because sometimes, guys, even if you're running in a little bit of profit on price, it can just still do a U-turn and knock you clean out. That is still money being lost, and it could have been it is a outcome that could have been prevented, right? You could have changed the outcome. What if only you took? Sometimes it's like, oh, some people like say, and I've done this myself as well, set and forget. You know, just place your trade and walk away, and if you hit your stop loss, it is all good. Well, if it goes to a 1 to 2, put it at break even, and again set and forget. Why don't you set and forget with these kind of trades, right? I think it works perfectly fine. Again, I don't know what currency pair you trade, I don't know what strategy you trade. I'm just showing you different ways to manage your stop loss and manage your risk. Now, method number 4, guys, right? Method number 4, this is going to be the last one, how to manage risk, and then I'll dabble down into a bit more entries as well. If you want to go into, okay, so here, let's just remove these lines, make it a bit more clear for you guys. Let's remove these lines. Okay, so we're going to use 300 points for the stop loss. Now, what you can do, guys, is, well, some of you guys might be like, well, I don't want to, you know, I don't like this, any of those free methods. This is the last one, and it's very powerful as well, and I'll be telling you why. 300 points, but now what you can do, guys, move your stop loss to 600 points, right? Move to 600 points. Now apply the 1% here. Now instantly move your stop loss to half, again back to 300, right? And now whenever I lose, I'll still lose 0.5%. But what's the difference though? One, I'm using the original from the data I've collected. I'm using my original stop loss, but now whenever I lose, I'm still losing half, rather than moving my stop loss to here. I'm giving the price more breathing room, right? I've increased, and it doesn't have to be 300. You know, it doesn't have to be 600. Sorry, you can move it to originally start with 500, and then move your stop loss to 300 or even 250, right? Or even 270. And what is that? It's still a similar outcome in terms of risk to reward. Why? Because let's just say how much is a, you know, 600 point stop? Let's say almost 1 to 3 risk to reward. If I move it to 300. Now, you know, it's almost 1 to 6 risk reward. And but what have I changed? I've given my the market more breathing room again. And trust me guys, when you start working on these kind of things, this is what's going to give you you know, an edge 100%. You know, we always focus on how can we win more. You know why? Greed kicks in, and we just want to focus on how much can I, why did I catch this 1 to 9, sorry, 1 to 19. If you didn't catch this 1 to 19, it don't matter. Markets ain't going anywhere. You know, trust me, you might go somewhere, right? You know, obviously what I'm trying to say by that is, you know, maybe you might get demotivated and you don't trade anymore. You might distraction. You got to stay focused, or you know, so you got to be more you got to have the faith in the markets, in the sense of they're going to come back tomorrow, they're going to come back the day after, they're going to be, markets are going to be around guys long after we're gone. So you got to be like, opportunities are always going to be there. We just have to hold the discipline to come up every day to the markets and trade. Now look at this, this was a almost a, look at the size of this, like 1 to 19, almost 1 to 20. So let's just see when do the next time we get an opportunity like that, right? Look at this huge bullish run here. I'm sure there's opportunity here. Look at this bearish move to the downside, opportunity there. I mean, look at this push to the downside here, huge 1 to 20 maybe. Another push to the downside here, another huge push to the downside here. Even if I was to get something like this, and let's just clone it. So look at that. Maybe there's an opportunity you would have caught down here. Maybe there was an opportunity you would have caught down here, and maybe an opportunity down here as well. So why, imagine these buy positions, right? Gold is insane when it starts moving, right? So why are we giving so much emphasis on that one particular move when there were so many opportunities that came about? And obviously don't try to catch 1 to 19s. I want to end the video as this. Don't catch to 1 to 19s. Focus on, you know, getting those small moves, catching those, you know, try to aim for getting a piece of the cake, not the full cake. But I hope this video you found it helpful. I don't want it to be too long. Link will be in the video description if anyone is interested in the one-to-one mentorship, unlimited one-to-one sessions as well. And you know, just building this channel, community, everything. Your response is overwhelming. Thank you very much. And yeah, make sure you like, comment, subscribe, share. Take care, and I'm out.